Cam the Mortgage Man here for January 31st for Cam's Mortgage Minute. For those of you who wanted a January 30th Mortgage Minute, unfortunately I was not well and for some reason couldn't do the broadcast. But today I'm live in here and I'm going to talk to you about CMHC backing fewer loans. That's right, audience. It just came announced that CMHC is looking to curb the amount of loans it's backing as it's getting close to the $600 billion limit that is imposed by the government. What's happening is that not only is CMHC backing a lot of high ratio mortgages, those are where there's less than 20%, but what's really adding to CMHC's weighting is backing conventional mortgages. Those are the ones where there is more than 20%. Now, you would wonder, well, why does a mortgage that has more than 20% equity have to be backed? Well, it doesn't have to. The banks are not required by law to have to insure these. They are when there is less than 20%. But what the banks are doing is they're insuring these so they can get them off their books. In other words, they're securitizing it. What banks have to do is they usually have to hold a certain amount of cash reserves to offset the risk that could potentially be there. But by having them backed with CMHC, the banks are saying, hey, you know what, that risk isn't there anymore, so it's freeing up our capital to do other things. Now, good news, bad news, well, it's a matter on how you take it. CMHC delinquency rates are below 1%. So some would say, hey, what are we really worried about? But at the end of the day, CMHC is, again, backed by the government, and as you remember from my last conversation with you, the government is just really all us taxpayers. So, should we be concerned? Well, if the market does correct, of course we should have some reservations. The question is that CMHC should always be working in a prudent manner to protect everyone, because really CMHC is for all of us. So, just to let you know that we'll see if the CMHC does go to the government to increase that $600 billion limit, because at one time it used to be around $450 billion and they have ramped it up. So, what lies ahead? It may mean that CMHC might be a little more picky on some deals, they may hold off a little longer on some approvals, but obviously they cannot stop backing mortgages, because guess what would happen? Yes, the market would collapse. We can't have that either. But we also don't want them to back loans that don't make any sense, because guess what? The market will collapse. That'll happen. So they walk a fine line here, and let's hope they do the right thing. It's been Cam's Mortgage Minute. Enjoy your day.